The economy has been remarkably stable lately, leading me to wonder, is it lulling us into a false sense of security? And what does it mean for Federal Reserve decisions next month? I'm Dr. Bill Connerly, and this is the video edition of my monthly newsletter for November 2017. GDP growth came in at 3% last quarter, again. The overall economy has been remarkably stable the last few years. I measure the volatility or cyclicality of the economy with a rolling standard deviation of logarithmic changes. Let's just say when the line is high, the economy is going up and down a lot. When the line is low, we're pretty stable, steady growth. I measure over both a 5-year interval and a 10-year interval, and we are in very stable territory. That's good for business so long as it continues. But I worry about complacency. There is still risk of recession. The Wall Street Journal survey of economists puts the risk at about 16%, and I think that's in the ballpark. So I am not forecasting a recession next year, but I could be wrong. Contingency planning is vital for all businesses, nonprofits, and governments. If you need help with that, give me a call. My book has 2 chapters on the subject of contingency planning. So, if there is a downturn, what's the most likely source? I'm looking at consumers. Back in 2015, the growth of consumer spending was matching the growth of take-home pay pretty closely, but not recently. Spending is up 4.4%, but income less than 3%. This mismatch won't continue for long. One possible resolution, of course, is a drop in the growth of consumer spending, which would be bad for the economy in the short run. The other possible resolution is higher income. Job growth will be low because of the tight labor market, but wages could rise. In fact, most economists are surprised wages have not risen more already. My forecast is that we are 6 to 9 months away from wage acceleration, and in the meantime, consumer spending will flatten out. So what about the Fed? Will they raise interest rates next month? If I'm right about consumer spending slowing, they might not. And inflation is pretty low and not rising but falling. My fellow economists expect a rate hike in December, followed by more next year, but I'm on the fence leaning against a December rate hike. We do have more good news though. The global economy is improving, and one indicator is oil prices. They continue to rise just a little. This is not due to OPEC or running out of oil, but expectations for greater demand as the global economy grows in the next few years. And for more good news, check out your IRA or 401k. Stock prices keep rising. I'm a little surprised and a little nervous. But over the years, I've learned that I do better staying fully invested than trying to time the market. I'm Dr. Bill Connerly. Thanks for watching, and you can subscribe to my monthly economics newsletter email by sending me an email or hitting the sign up button on my website. We'll see you next month.